Hello, and a very warm welcome to everyone joining us for the latest episode of Finax Mudrovačka. Today is Tuesday, March 3rd. We're actually going to be recording an episode focusing on Iran and its current geopolitical situation, where America on Saturday morning, together with Israel, launched an attack on Iran. And I have invited my guests here. So I have Misho Vakulik and Janči Tomka with me.
Hello.
And I will therefore begin perhaps with a small introduction, a bit of context, and an explanation of the current situation. What is actually happening today in Iran, in the region, and is it truly significant from the perspective of the global economy?
What essentially happened is that the conflict flared up again, and it's basically a continuation of those previous conflicts, as is common in the Middle East. So last year, in June, both the United States and Israel virtually jointly largely eliminated the Iranian nuclear program and the vast majority of its air defense, which is now again crucial for this episode we are recording today for the situation. And Donald Trump and indeed the United States for quite some time now had actually been preparing to put pressure on Iran, though it appeared more like a tough form of negotiation. They simply dispatched several groups of combat aircraft carriers along with support personnel, equipment and the like. You know how in a way the pincers were tightening around Iran, and it was expected that they still had some time to reach an agreement simply to eliminate their nuclear program and to agree to the conditions that Donald Trump would dictate. That's not exactly what happened. What actually occurred is that the United States and Israel, it seems Israel had their intelligence operations very well under control. And thanks to extensive hacking for the past few years, they were routinely monitoring traffic cameras in Tehran. They simply had everything completely covered. Plus the United States, it appears, had quite good information through the CIA. They also personally discovered that a meeting was simply going to take place of the supreme leadership, essentially of the Iranian, those revolutionary guards, including Ayatollah Khamenei and, in fact, the military command of the country. And essentially they decided to capitalize on the moment before the official conflict had even started. Everyone was gathered in one place, and if they delivered a preemptive strike, it was quite a good situation. So Israel and the United States launched planes, missiles, and after a long time, Americans also launched some one-way drones, and essentially with one large attack, they basically eliminated the entire leadership of the country. So after many decades, Khamenei is no longer at the helm. And in retaliation, Israel unleashed several dozen bombs on a government complex situated in the very heart of Tehran. So once again, this is one of those truly astonishing examples of just how significant the difference actually is, both technologically and in terms of espionage and counter-espionage, to simply launch an attack on a country and essentially manage to get over Tehran without the population being informed, without them retreating into bunkers or being able to react in any way. And that's precisely what simply happened.
Okay.
I would just add, if I may, that the most frequent question is how it differs from the one at the end of last year and the beginning of this year. It's different because Iran is actually carrying out counterattacks. So today, countries are being attacked by Iran, and I have it written down so I don't miss any. Kuwait, Saudi Arabia, United Arab Emirates, Bahrain, Qatar, Oman. This means I will speak more about our clients' perception as investors, because I won't challenge Janči's encyclopedic knowledge. So I think this situation feels very different in how the conflict is perceived, because many of us have an acquaintance who was planning to go to that region or is currently there. In my opinion, Europeans perceive this conflict much more sensitively, also because social networks or the media have truly inundated us with countless videos of drones that are flying over Dubai and exploding in other countries as well. From this perspective, I would also add the second point regarding geopolitical tension. Why it's higher this time? It's precisely these counterattacks by Iran and the region that are increasing attention on the Strait of Hormuz, through which currently oil tankers are not passing. And you were asking about what kind of economic impact this has. Well, Iran as a country doesn't really have any huge economic impact. It's almost negligible. Iran has been burdened by sanctions for a very long time. So it's a country whose income essentially comes only from the sale of oil. That of yours, that oil sale makes up about 3%, or rather oil extraction makes up about 3% of daily production.
What worldwide?
Worldwide. This means it's not entirely negligible, but it's, one could say, a very small proportion. The main thing happening there, or why the whole world is watching that region, is that the entire Persian Gulf, or that specific area around the Strait of Hormuz, sees over 20% of global production passing through it. This is already a more serious problem, and we will discuss in more detail its impact on oil and similar issues.
So looking at it from this perspective, as in the short term, the current situation is definitely quite tense, and it's already, one could reasonably argue, that it's a regional conflict.
And that's exactly what I wanted to ask, because you listed countries here that, in a way, I'm not saying were directly drawn into the conflict, but let's just say they were impacted by rockets. Do we still consider this a regional conflict? Or perhaps it's precisely because the oil from the Persian Gulf is mainly exported to Asian countries, European countries, and China. We know that a large part of oil consumption comes precisely from these, that it has the potential to expand into a wider global escalation.
Yes, I perceive that the media and economic and market commentators are using the term Third World War and similar, but nothing of the sort indicates it by far, and it absolutely doesn't have such a scope. It's still simply a regional conflict in the Middle East, which has been characteristic of the region for the last decades, with various large wars taking place there. Mostly Israel and Arab states were involved in some form. It's a bit paradoxical now that, Israel is attacking, but Iran decided to attack its neighbors too, in the sense that it's attacking American bases in the region, and essentially those surrounding states that actually allowed the United States and Israel overflight or are working to shoot down their missiles. So it's still a local conflict without any truly dramatic impact. What Misho said, of course, is valid. The key is whether energy will simply flow there and to the buyers who are purchasing it, that is South Korea, Japan, Taiwan, China, and so on. In recent years, over the past decade or so, since Iran essentially had no access to international markets, meaning it couldn't sell that oil just anywhere, then 80 to 90% of it was bought by China, which is it capable of such a kind of treatment of human rights? And the fact that they weren't really bothered by that dictatorship, and they simply bypassed it through some means and circumvented those sanctions. So, China lost a cheap oil source because they were obviously buying it at a discount. It's not that they wanted to help them, they simply bought it cheap. And now the crucial question is, where will that particular region actually manage to secure its own energy needs? So we're discussing how the price of imported liquefied natural gas coming into Europe has in recent days surged by approximately 40 to 50%, because a massive amount of it from Qatar has actually flowed into Italy and I believe also Poland, reaching other terminals. And since one of Iran's attacks actually hit Qatari export facilities, they'll be repaired. We're talking days, weeks, maybe a month or two, and Iran will run out of steam. Those rockets won't have anywhere to launch from. Quite a massive destruction, a disintegration of that state militarily has been occurring recently, so we need to endure this, and then perhaps we'll assess the greater impacts.
The most crucial part of all this is when the conflict will finally stabilize. The entire world is so intensely following Trump's statements, wondering when he will actually end what type of war. So here he specifically states that within 4 weeks the conflict should actually be concluded. The coming days and weeks will show us how much he was mistaken or not mistaken, how much truth he holds. But as for China and its oil offtake, from a short-term perspective, China is quite capable of securing alternative supply lines for its crude oil deliveries. However, from a medium-term point of view, already in the order of months, let's say reaching up to a full year, if this situation were to persist, then naturally it would present a significant problem, because then that crude oil would be missing from somewhere.
So now, Udaku, who does this help? It will help Russian oil, right? What the Russians basically suffered when oil prices dropped to $60, $70. Well, today it's 80. And now India was perhaps a bit pressured by Trump not to buy Russian oil, but if it doesn't flow to them from the Persian Gulf, the same for other countries, then they'll just buy it somewhere else.
So that's a bit of an indirect, perhaps a rather small winner.
Hey, it's Tuesday morning, which means we have a bit of an advantage in that we didn't rehearse the podcast yesterday when we were precisely considering doing so, but we've now had our first business day behind us. I'd like to ask whether it means how perhaps historically financial markets perceived such conflicts, whether perhaps If we look in a broader context, perhaps even going back to the past, Iraq, the 90s, but perhaps also last year, right, when Israel was already bombing there, Iran was bombed. And so perhaps even considering yesterday's events, if we assess the situation in this way, what then is the actual significance today, as it were, of this conflict for the global markets?
I'd start by saying that financial markets generally hate uncertainty. This means the fresher the conflict is, the fewer answers and more questions there are. Financial markets often react negatively to that situation by increasing volatility from stocks to commodities and various classes of financial assets. When we look back at that past, I think we very freshly still have the current Russian-Ukrainian war conflict, the Russian invasion of Ukraine, which has actually been ongoing since 2022. So we could experience it, one could say, very intensely from the perspective of a European investor. Basically, you mentioned Iraq in 2003. This was a situation where markets reacted negatively even before any initial armed clashes, before the armed conflict actually began. The uncertainty surrounding whether the Americans would go in or not created a lot of apprehension. What's interesting is that as soon as the 2003 war conflict started, stock markets began to rise. Of course, not only due to that conflict, but military conflicts over the past decades primarily have a short-term impact on financial markets with higher volatility. But after a few months, they seem to disappear from the map of attention.
It hasn't been manifesting here for quite some time. The conflict actually started over the weekend, so everyone was actually watching how the markets would open on Monday when that activity resumes. So naturally, the primary initial and largest impact is directly on the price of oil, which jumped by about 7-8% on the first day, about 4% today. So its price rose, and the price of gold also rose a bit, but that had already been increasing lately. But if you just looked at the development of stock indices, and I didn't tell you what happened over the weekend, you wouldn't have a chance to find out that some conflict had erupted in the Middle East. You would have guessed it from the oil, though.
Yes, something's probably up.
But the markets actually opened down by about 1.5%. When we look at American stocks, Europe a bit more because we're closer. We draw energy from there, so it affects us a bit more. But Europe was at historical highs again, beating America over the last year and more. So some kind of relief would have come anyway, and some caution actually returns to the markets. But American stocks paradoxically actually closed yesterday in the black. The S&P 500 index was up about 0.04 barely, but green, meaning it erased the entire decline. The technology Nasdaq, it closed up by roughly 0.4%, which means it practically completely ignored it. Essentially, the markets were more impacted by concerns about the slowdown in the growth of the entire AI sector, and NVIDIA's results, Citrina's research, which painted a black scenario of how artificial intelligence, AI, could actually cause negative impacts. So this had a greater impact on profitability than any conflict in the Middle East.
It is completely normal that people there get into fights.
The Saudi index opened Sunday evening down 5% by Monday morning. The index is called Tadawul. It's the largest index or stock market in the region. It closed, opened at -5, ended around -2%, so it can't really be called a massive sell-off. I read an analysis yesterday evening, or rather Monday evening. JP Morgan stated they are currently not changing their positive outlook for the end of the year on the American stock market. So from this point of view, nothing is happening yet, which doesn't mean it couldn't, because the escalation could become much larger. We could witness some very significant turns of events. It's obvious that there are more questions, but this is the current situation.
I can still, maybe give Trump credit for one thing, that they usually start these things like around Friday night or Saturday morning after the markets close. I even noticed in the papers, I can tell you that even when they took Maduro from Venezuela, I must add that it was on a Friday evening, and ultimately the market reaction, I believe, was also positive on Monday, that it closed in the black.
Saying it calms the situation.
I'm not saying that. I just want to reassure clients with this, that even such significant geopolitical events don't necessarily have such a big impact. And perhaps this brings us to a point. You mentioned that oil prices have risen, right? Brent, maybe from 71, is now around 81. So from a long-term price perspective, right, those $81, when we look at it, is that price extremely high, or is it low, or what exactly is it?
It's not high at all, because if we take a look at the last few decades, it has been traded at a very similar price point many times. So it's nowhere near the kind of scenario we saw in the 70s when Arab nations actually imposed an oil embargo from that particular region. There were simply major wars against Israel, and the United States was essentially caught off guard by expensive oil and very high inflation. The situation today is completely different, thanks to fracking, thanks to new technologies. Americans today are oil exporters. Essentially, they technically didn't need it, nor do they need it. They are rather exporting it. Plus that they secured full access to Venezuelan oil. So today the world is no longer susceptible to oil shocks. Even if oil now rose to 100 to 120, okay, it would slightly revive some inflationary expectations that the price of energy would actually manifest everywhere. There's already speculation about how the ECB will react, how the American Fed will react, that perhaps those interest rate cuts won't be on the agenda at all. And we've already seen this with a significant dollar strengthening. When we spoke of winners like oil, gold, and the American dollar, they all rose. Even though America is currently at war, it's simply presumed that the Federal Reserve won't be cutting interest rates because inflation could potentially be higher, and the dollar serves as the secure safe haven. So today, oil, essentially, yes, it can temporarily, just as Misha mentioned, during Russia's invasion of Ukraine, it temporarily jumped to 120, and then it gradually dropped to 60 until quite recently.
So the current price is a weighted average, exactly equal to the weighted average for the last 5 years. So that price is today.
Well, yeah. And if we adjust it for inflation, all the news will be that we'll be filling up for €1.80. Today, prices at gas stations are around 148, 150. But if we actually adjust it for inflation, considering what the old price was, then today, crude oil wasn't really cheaper, right, in real terms.
I would put it this way, because you're also asking from an investor's perspective, Sia. So I would share the view that it is incredibly liberating to invest passively, but we'll get to that later, and to diversify, because I've experienced many situations over the last 15 years where clients held oil. They held it for various reasons, not as their entire wealth, but as a certain portion of it. And now this mental struggle, this brain racking over an investment decision, what will I do now? I see a nice profit in 2 years, in 2 days, 2 years, in 2 days. And now say I'm thinking about whether to sell out of a position for a higher one, reduce it, hold, or set a stop loss. Investors who currently hold commodities, whether it's gold, as Janci mentioned, haven't seen an extreme reaction yet, but the last year, or rather a longer period, saw a strong increase, so that's already priced in. So to constantly fill your head with all these concerns when making investment decisions is something that is extremely challenging, because as soon as you wake up in the morning, you immediately want to check how that conflict is further escalating and exactly where your investment position stands. It's very dangerous.
Okay, let's try to explain to our clients who might not be as investment savvy why the increased oil price actually influences inflation. We probably know that, but how does that increased inflation then affect the development of the global markets? What kind of impact does it have?
So like inflation, or rather inflation expectations, are like one of the most important metrics that the central banks monitor, because essentially what happened, we all noticed it in our wallets, on our paychecks, and wherever we spend money. After COVID, we had extremely high inflation because we simply flooded the market with money. It was a solution to an external shock, namely that global pandemic. Inflation, more or less, in most of the developed world, practically everywhere except Russia, which isn't entirely a developed nation, has been successfully brought down to somewhere near 2%. So even though I know that we in Slovakia are amazing premium, we had a 4% inflation last year. But the Eurozone is already quite close to the European Central Bank's 2% target. And in the United States too, inflation was actually on a downward trajectory, which is why the American Fed was lowering interest rates a little faster than the ECB. And now if inflationary expectations rise a bit, that we will still have to import some gas. But if a major source is lost, or oil and gas simply stop flowing through the Persian Gulf, then you'll buy it elsewhere and at a higher price, whether from the United States. They'll gladly deliver that LNG to us, but perhaps at a slightly different cost. And considering the current market price, it's quite clear that when everything becomes more expensive and it simply causes a temporary inflationary shock, then quite simply those rates won't go down. They won't be decreasing any further. No to why is that negative, no? So the low cost of money, when households and firms can borrow for long-term projects, and as ordinary households, we might feel it with mortgages that today a typical mortgage can be obtained for around 3.2 or 3.5%, no? If interest rates were to continue falling, then perhaps mortgages would be at 2%. If rates start to increase or the ECB doesn't reduce them, then let's count on the current level, perhaps a little bit higher, that it could in a way be somewhat revitalized. The crucial thing is how long this will last and whether that conflict can truly be more or less concluded in perhaps 4 or 5 weeks, as Trump had communicated. Whether there will even be a force in Iran that can consolidate the country and simply sit down at the negotiating table. Okay, so militarily the country will probably be destroyed and defeated, but essentially the problem now is that there's no one to take over the country's leadership. Trump even comically admitted that the initial attack was, according to their expectations, perhaps even too successful, that the people they had actually prepared, like a B team who could take over the country, they were also at that all-hands meeting. You see why all-hands meetings are risky, where the whole company is gathered. So now there's simply no one to take over power in that country. And now, who will it be? Will it be the Iranian Revolutionary Guard? Will it be the army? Will this be some kind of new Ayatollah? We'll see.
Even this current attack is not being conducted by land, it's being conducted by air. This means that on the ground, the Iranian people themselves will have to take control, or as Jan mentioned, some kind of plan B or an alternative program. But from the information that is currently emerging, it will be extremely challenging. Just for context, the information I read, which is circulating, is that people received an SMS telling them not to leave their homes, not to protest, or they could be killed. And that's a world we can't even imagine today. I'll share a small experience, how to imagine that world from a financial perspective, how much that country is under sanctions. I have a client who loves to dive, and he went, this was even before COVID, like 7 or 8 years ago. And he went diving in this very area. And the travel agency that managed everything for him, well, in the transfer order, he put in the note, Iran diving or something like that. And that transfer order has not been processed to this very day. This means that even today the financial sector operates on the principle that any financial connection with Iran is immediately subject to increased scrutiny, halted, or similar actions. So the problem the client created was that he hadn't paid for the trip, so issues arose. But the main reason, discovered only after a few days, was that he put the word Iran in the transfer note and it wasn't processed.
Okay, so that I might perhaps fully, as it were, replace Rado, right? Because I know that Rado always, as it were, quite likes those challenges. Or maybe also just a little, so you could gently speculate if there's any realistic scenario in your opinion, and what's the probability that this could somehow get out of control. What if it causes, let's say, a market collapse, and we find ourselves in a bear market, which means a decline greater than 20%? What is the likelihood if that happens? Nothing else today, like, of course, we don't know what else might be added, but do you feel that just this alone, as it is, could lead to this, or perhaps with some add-ons, right, that it could result in such a larger global recession?
For me, it's very low, and essentially the steps that Iran has taken is that it simply decided not to attack, as it did during the June war, solely on Israel and the United States, but it actually attacked its neighbors too, including their energy facilities, or rather it's not completely destroying their oil fields yet. And that, of course, would cause an even bigger shock, but simply because it also attacked neighboring states. It's now speculated whether Saudi Arabia and other regional powers will join Israel's side more actively, which is quite paradoxical concerning Israel and the United States. So it's more like Iran tightened the noose around itself by actually attacking those neighboring countries that could have been a counterweight, because typically they would be the ones complaining most about Israel bombing Iran, as they didn't want to see Israel become so big and strong, even though in recent years those relationships had somewhat consolidated and essentially reconciled. So it appears that Iran is quite isolated, and the question is whether this situation has the potential to escalate or spread elsewhere. In terms of its oil production capabilities, that particular country isn't all that significant. Regarding advanced technology and military equipment, we essentially have just one true superpower, and that is, of course, the United States today. We've already witnessed from recent conflicts that they possess the capability to effectively set a country back by several decades, so that the objectives that Trump, Rubio, and the rest of the country's leadership have established are quite, evident, meaning they, depending on where they're speaking, either implicitly or explicitly, but more or less their aim is to completely eliminate Iran's capacity to produce at a later stage things like ballistic missiles, various drones, and other related items.
So that country, essentially the question is whether it will then be taken over by some military dictatorship which will simply operate more or less correctly with the Western world. But a return to that is probably no longer a threat, that no one wants to allow another version of an Ayatollah to simply come again, for that state to actually function in the same regime it did for the last 50 years or so. So I'm more inclined to view this as a relatively shorter, localized conflict. Yeah, and we'll see.
You summarized that well. Yeah, Posto, I actually see it similarly. I don't want to repeat myself, but there would have to be some kind of systemic problem, and a truly long-term one. For example, it's often mentioned that Iran could be successful in destroying the oil extraction infrastructure. Of course, it's incredibly demanding, but I would just like to mention something else. You asked about a 20% decline, and if that were to happen, my personal opinion is that the probability of it occurring is extremely low. But if such a situation were to arise, where a truly massive systemic problem occurred, how difficult would it then be to buy more during these market downturns? Because often investors are waiting for a correction, thinking, when a correction comes, I'll buy more, and they mean a correction of at least 20%. But when it actually arrives, even in this scenario, we're already making certain hypotheses. And these hypotheses are based on rather harsh, shall we say, assumptions.
Okay, but essentially, if you look at history and how war conflicts affect stock markets, they don't have a negative long-term impact as well, because company profits are simply key, and you'll just go to the store tomorrow, buy that toothpaste, fill up your car, take the kids to school, buy a new phone. That region is simply not economically significant. And the best strategy, of the last few decades was essentially to buy into any market shocks, any downturns caused by wars, pandemics, and so on. We actually saw this in the last decade, several times, even us as investors. So if the stock markets were to fall for such a reason, and we already see that they don't have much willingness to drop, that investors today are deciding more rationally, that even those often disparage small retail investors who panic and simply sell off their stocks, that this has hardly happened in the last few years, decades, or less so in the last decade. So that even today, it's no longer the case that I say some conflict and immediately sell off my entire portfolio just to buy it back cheaper later, because even small investors have learned that this isn't good behavior. And quite often within 6-9 or 12 months after such conflicts, stock markets are usually higher. You don't want to own the stock market of that local country, but you shouldn't have the Iranian stock index anyway to be on the side of a defeated nation, or simply a stock index that's wiped out to zero like Russia was, because it simply pushed out capital and you would have lost everything there. When you are globally diversified and have essentially bought the whole world, which applies to our portfolios, then a conflict in the Middle East, it's simply nothing extraordinary. We've experienced that many times.
When you open this up regarding our stock portfolio components, what percentage, if any, is actually there? And if there is any percentage at all, would people actually hold any stocks from this region?
Absolutely none. I mean, my apologies, not from the region, but from Iran.
From Iran,
absolutely
right?
None.
Okay, and is that considered the Arab region, like Saudi Arabia?
As I already mentioned, the Saudi Arabian index here in the ETF for emerging markets, that is developing markets, it actually represents only a low per mil, a very small percentage of that. And as for this emerging markets ETF in the fully equity portfolio, it has an allocation of 19%.
I believe that's 19.5. Yeah, it's more about the indirect impact there, that when Taiwan quite simply produces half of its electricity using gas from Qatar, then okay, that chip factory will just stop too. Every country has strategic reserves for 2 or 3 months more or less. So the question is how long it would take, but it would eventually catch up to us. Of course, it would catch up to India, it would catch up to China, it would catch up to the entire region. But currently, there's no direct impact. And again, you need to understand that when you have a diversified portfolio, which our investors do, you actually have elements in that portfolio that balance out the decline. For example, American oil drillers, oil processors, refineries, they're growing, and Boeing and Raytheon, weapon manufacturers. So something is always making you money. So
I tried to figure out how much of the defense sector is actually in the S&P 500 index, and it's hard to calculate because it's essentially industrial defense, and it's somewhere around 3 to 5% of that index. So you also have those winners. I also took the trouble to look at the day's biggest stock market losers, and I was reminded of COVID times because
Delta Airlines.
Airlines, yes, but Norwegian cruises, which are in fact cruise ships, saw their value drop by about 17% or something like that. And I distinctly remember that during those challenging COVID times when the entire world practically came to a complete halt, it was these very cruise ships that truly suffered quite significantly.
Dubai is a huge transit hub.
Right.
Sort of, if you travel to the Maldives or simply in this direction, then a huge part of the world's air travel actually passed through Dubai airport or that region, which is currently stopped. Of course, we'll see about that too. And these will have a direct impact on those countries, but from the perspective of a Slovak investor, unless you are that Slovak investor who purchased an investment apartment in Dubai in a perfectly secure location where absolutely nothing can ever happen, even though it's situated on a powder keg, that rings true, doesn't it? And what's a bit positive is that my LinkedIn is suddenly quite readable, that all those real estate influencers who simply recommended as a plan B to acquire an apartment in a high-rise tower in the Middle East, that has at least somewhat subsided.
Hey, how that investment paradise can turn into an investment hell. Just imagine from the perspective of the decision what it's like to be in a situation where you bought a property in Dubai a few months ago with all your life savings, let's say 200, no, I misspoke, maybe 300,000 euros or even an unlimited amount. The stress surrounding that situation must be absolutely enormous.
I've seen offers for buyouts at 20, 30, 40% off. When someone needs to quickly get rid of properties, they'll find capital is ready to buy. It's simply distressed assets, but not everyone has the nerves or ability to withstand it. So it's more about whether it will be permanently damaged. But Toyota, if Iran's ability to intervene is militarily eliminated, then ultimately it's positive for the security of the entire region, for Israel, Dubai, the Emirates, anyone. The question is what path will be taken to achieve that and whether it will truly be militarily eliminated.
I'd like to revisit the topic of those Dubai real estate properties because when you consider the impact, Jotan, you specifically asked about the impact on, for example, a Slovak European investor, and we then outlined how it is represented within Finax portfolios such as the dollar and how it's affected by oil prices, inflation and interest rates. Speaking of interest rates, you really hit the nail on the head, Janci, because yesterday yields, meaning returns on both American and German or European government bonds actually rose, which is essentially a representation of the fact that the market short-term anticipates that inflation might increase in the economy. Back to diversification. My intention there was to clearly express just how dangerous it actually is to follow those influencers and essentially their so-called guaranteed tips for high returns, which for many years these specific Dubai apartments have actually represented. And in the past, we've certainly had very similar offers right here. I mean, I don't really want to compare Dubai apartments directly with NFTs or crypto and things like that, you know, but one must always be aware of what risk is truly there. And my experience tells me that investors, as it were, the greatest risk that comes from an emotional standpoint is when you don't possess liquidity. Because as soon as a liquid asset starts to drop, but you can still sell it, I'll just use the American stock market as an example, but you can still sell it for some price, then you are fully aware that, okay, there is a certain loss, I need the money, maybe I'll close it out, or I just can't manage my emotions. But once you have an investment, let's say in real estate, in a location where liquidity significantly drops or virtually vanishes, then the stress, the emotions you experience concerning that investment are immense. So getting access to cash and liquidity is often the number one priority for investors in times of crisis.
Well, we've already, in a way, somewhat marginally touched upon that topic, that client strategy and how they should react to it. You were actually mentioning there that many investors are kind of waiting, you know, for that potential market drop, you know, by, I don't know, about 10 or 20%. I certainly have quite a few people in my circle who would really, really like to see such a decline so they could perhaps buy more. But let's just go back a little bit to the topic of imagine what happened today, right? Or what happened over the weekend. The markets have reacted practically so far. If we consider it globally, it's almost at zero, right? Minus 1 or 2% approximately. So if it were like minus 20%, that means something significantly bigger must happen. There must be a much bigger disaster for you to have the nerve to buy in such a situation. This means perhaps I would like to ask two specific things. Is the current economic situation, therefore, a compelling reason for a change in investment strategy, or should our clients in some way react or respond concerning their investments?
I don't really see a reason for that. If we're talking about our average client, if we were to represent our 100,000 clients as one person, it's a young person, roughly 40 years old, who simply saves with us for a long-term goal, which typically involves long-term wealth building, naturally with the goal of securing income for retirement. And now if someone invests over a 20-30 year horizon, they will experience many conflicts, many wars, and has already experienced many wars, such as Ukraine in 2022 and the Middle East last year, that there are and will be many such conflicts. However, the impact is temporary, short-term, and limited. The best approach is simply not to react to it. I believe that even among our clients, we observe that the more they have experienced, the less they feel those kinds of emotions like panic, and this is truly unique. This has never happened because in the last decade so many events have occurred that have never happened before that one gets a bit numb. Also, one of the first things I looked at on Sunday after midnight was how American futures looked, or how the markets would open, where they would drop, but you're talking 1.5%. That's nothing. They're still at an all-time high. Europe corrects a bit and the world just moves on. No doubt. So the best approach for someone with spare cash is it's still best to invest it gradually, because waiting now to see if the dip will be 2, 3 or 4% in about 20 years, it's almost irrelevant. It's more about the psychology that when I'm sitting on that money, I have to reevaluate it every day, and I can easily imagine a scenario where the situation simply calms down. Not that the conflict would stop, but the markets just accept it, get used to it and move on. And once again, we'll all be watching Microsoft's financial results. And now companies like SpaceX and OpenAI are simply going public on the stock market. Other factors are actually responsible for the long-term growth of the markets rather than some conflict in the Middle East.
Misho, considering how long you've been dedicated to client relationships, you haven't just met thousands of clients. What common mistakes do investors make during such geopolitical crises, or what else? Is there a strategy of that sort that I often come across, the notion that I'll just sell everything out now? I've got some cash set aside as a safe haven, and then I'll reinvest once the market settles, thinking that these strategies are good and they actually work. The answer to that is such a boring answer that, the most common mistakes people make. So first, let's address that.
Yes, that's how psychology works. So far, we're discussing how markets have only seen a couple of days, like -1, 1.5, or -2%, nothing really significant. But as soon as markets reach the level of -25, -30%, so if your portfolio is invested, let's say 100% in stocks, which constitutes your entire wealth, your investment assets drop by 25 to 30%. Then it truly happens that investors, in the majority of cases, simply cannot cope. However, in the last 15 years, we've only experienced such a situation once. Or, for a European investor, it's happened twice. One instance was the Greek financial crisis in 2011. The second time it was COVID, and both these cases were such that it went over -30%. It was there for 1 or 2 days. So if you didn't manage to sell quickly, I saw investors who managed to sell. I didn't manage to buy more, but I saw investors who managed to sell then. So as soon as it gets to that point, one thing is to have a plan and another is to stick to it. And sticking to it is much harder than creating it. Therefore, it's essential to manage expectations. So I need to have a really good grasp of what my portfolio and investments can actually achieve in terms of risk versus return, and what my objective is and what the liquidity situation is. So the biggest mistake I've ever made was thinking I should sell everything now because I read something or a business acquaintance told me to. I even know an insurance company CEO who texted me telling me to sell out. There were countless similar situations. But as soon as those clients sold out, it was like some kind of Murphy's Law. Everything immediately turned upwards. I know many clients who completely lost faith in investing and never wanted to invest again because of this mistake. Because of this mistake that they sold off during a downturn, meaning they were in the red, they sold, and then the market turned upwards and they no longer believed it. And then you start saying that it's an artificial market bubble and it has no economic justification because stocks are inflated, etc., etc. But history shows us the exact opposite. It's the biggest mistake to sell everything off. The biggest mistake is to cancel any standing orders. Janci mentioned that, and I like that very much. Check your standing orders for regular investments if you have them, if they are going through, and if they will continue. If you have spare money, then even if it's a small correction, again, you can buy it at a slight dip according to the investment strategy that you have. And statistics show that the biggest gains, even though we're not there today, but if big crashes come, the biggest increases come right after the biggest crashes. And just one more final statistic for you to think about concerning 30% market declines. If you were to pose the question of a 20% drop, but specifically 30% downturns in the market, we have actually witnessed 13 such events in 76 years. So that you'll live to see it is probable, but also that you'll get to utilize it. And that was always some crisis that was emotionally challenging. So these are mistakes, aren't they? Not sticking to your own investment strategy.
Excellent, guys. I'm truly delighted that we've, I believe, quite thoroughly covered these important topics. And I sincerely hope that we've also managed to relatively reassure many of our clients, because as I listen to all of your insightful responses here, I certainly wouldn't want to in any way not just disparage, but rather downplay the true force and intensity of this conflict. But it seems that ultimately we see that on those global markets, and perhaps on our clients, it doesn't really have such a truly significant impact. I certainly perceive it as being somewhat smaller than, for example, a war in Ukraine, which might be happening in some neighboring state. Is there anything else you'd like to add? Perhaps something that hasn't been mentioned yet before we say our goodbyes?
I believe that's everything, or somehow, in my opinion. Perhaps the very last thing I'd mention is that strengthening dollar now actually helps our clients, investors, because in this period of uncertainty, the dollar is simply such a safe haven. While still relatively recently, the euro-dollar exchange rate was around 120, 121. Now, because the dollar is strengthening, it can actually absorb a relatively large part of those shocks, specifically the decline of some assets. That's because we calculate our wealth in euros. Now, since the euro has weakened against the dollar in recent days to around 1.17, slowly approaching 1.16, it has essentially protected us in this case. About 60% of our assets are dollar assets, and within that percentage of assets in the portfolio, roughly 60% is actually America. And when America stalls, or yesterday closed flat near zero and so on, or it doesn't fall much, and conversely the euro is falling against the dollar, then converted to euros for the entire portfolio, the shock is somewhat limited. So what hurt us last year now protects us a little.
By translating this into other languages, we're making it accessible. I assume the same principle applies to the Polish zloty, Czech crowns, the Hungarian forint, or other currencies.
I haven't fully examined the effects, but the dollar is strengthening against all currencies generally now.
My final thought on this matter is that the media absolutely loves sensational and catastrophic article headlines. And these catastrophic headlines, especially when they have an investment or economic context, can very often mislead investors in the wrong direction. So my recommendation is to always look at that portfolio with perspective, step back from the table a bit and see what my goal was, and keep emotions under control.
Awesome, guys. We really appreciate it. And I'll also be looking forward to perhaps some more episodes with you, the finale of Mudrovačky. Goodbye, everyone. Thank you.